My name is Angelo. Looking forward to present today's webinar to you, and I hope you truly enjoy it. Support and resistance, sharing the screen with you right now, and you should have in a couple of seconds access to this slide and the presentation. Okay, should be coming on any second now. Okay, there it is. There's the title page, Trading with Support and Resistance. Enjoy the webinar, guys. Let's go. So, support and resistance. We'll begin now, so stay tuned. Q&A at the end. If you have any questions, send them in, and we'll be answering. Moderators answering as well. Everybody is ready to go. Let's begin. What are support and resistances? Very good question if you're going to use these correctly. So, support is a price level where the downtrend can be expected to pause, reverse due to strong concentration of demand. So markets, guys, it's all about supply and demand, right? So when the demand is diminishing, then we can expect the market to resist and start going up again. Resistance is exactly the same. It's the opposite of the other side, though. If the market has climbed very fast, it's reached a certain level, there's no more buying power, then we expect the market to reverse back down again. It will look exactly as it does look over here. These lines will be lines we draw in, so they're not going to exist on the platform until we put them in manually. But the idea is, if we're tracking the market from this point here, we see it touched an imaginary line up that point. We can consider already this moment as a resistance moment. We see at this point here, it touches a bottom. This can be considered now as a support. At this moment, it does touch again the same imaginary lines. We can draw the line in and call it a strong resistance at this point. And here's the confirmation on the bottom side for the support as well. And we see further down, it touches one more time here on the support, touches up there on the resistance, once again on the support. And this is a beautiful example of how to create a channel with support and resistance. Doesn't seem complicated. It isn't complicated as long as you're doing it correctly and putting the right moments in. Okay, watching from Kenya. Welcome, 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 Daniel. One of the many watching, over 300 at the moment and climbing. Important to know about support and resistances. This few slides here with a bit of wording just to understand more what we're showing here. So support and resistance can be used on every type of trading instrument. Binary traders, digital traders, Forex, crypto, commodities. Support resistance, you can use this on everything above. Time frames as well, it's mentioned further down. Support and resistance can be used alone or in combination with other indicators. My personal favorites are support resistance together with RSI, maybe throw in there a MACD, or generally just build it up so I have more information. But you can, by all means, use it on its own and just follow a trend line or follow a little channel you create with the support resistances. You can actually make a whole grid, which is one thing I'm going to show in a few moments. Okay, lots of people from Kenya coming. Philippines, I see the first Philippines here. Welcome, guys. I don't see many questions. I'm hoping the moderators are catching questions if you have, and they'll be answering them. Okay, all right, next line here. Always the asset you are following will get into a range and then break out of the range. This is the natural movement of the market. So guys, important to understand about trading. It never is simple. It never stays in one pattern forever. If you see something in a strong uptrend, sooner or later it will tank out, it will reach its peak, and it will start reversing. And it might go into a sideways market. It could go into a downtrend, but it will not stay in that uptrend forever. People who know about Bitcoin will definitely know what I'm talking about. It was climbing very, very strongly towards the end of last year. It tanked out, and now it seems to be dropping, reversing a little bit, pulling back, but it's absolutely natural. People who bought this asset nice and early, people who bought Bitcoin in summer of last year have made a beautiful profit. So it's very likely those people just cashed out and took their profits while they saw the market dropping a little bit. Moving on, you can use support and resistance to open trades. Also, you can use them to close trades and take profit. Really important, guys. A very frequent question I used to get as a VIP account manager very frequently was, when do I stop the trade? When do I get out of the trade? Easy. If you have a support resistance, you buy your trade on a support, for example, you leave it for a couple of days if it's a long trade, a couple of minutes if it's a short trade, or minutes, hours maybe. And then once you see it's coming close to your resistance, you can all manually close it down, or you can put in a take profit stop loss exactly on those lines. A take profit would be nice on the support line, for example, if it's dropping to the support, on the resistance if it's climbing to the resistance. And then your stop loss, if you've made a mistake, you can draw it just underneath the line where it's building up from. If it's going for a downtrend, you can put it in as just above the resistance on the top. If you're going for a uptrend, uptrade, your buy trade, you can just place it underneath the resistance you're just building up from. And that way you're limiting your risk if the trade does turn in the opposite direction and the resistance or support you chose doesn't hold. Okay, it is possible to use the support and resistance for long-term and for short-term trades. This is for everybody working here. Short-term binaries, 1 minute, 2 minute, 3 minute trading, long binaries, Forex, digital, crypto, anything you're trading, long-term or short, you can use the support resistances. This is what I'm saying, it's such an important tool for you guys. Okay, Mr. Matubu from Botswana, welcome, sir. Last line here, last paragraph before we get a bit more technical. By implementing multiple support resistance lines, you can predict future movements and levels. I'm going to show you on multiple charts and on my live account how to do that, how to make a grid where you can use that for long-term and short-term. One of my favorite things to do with support resistance. Okay, how to identify support and resistance levels. This is now the meat of the webinar, the main part of it, how to use this, how to implement them. So we must find a swing high when the price of the asset has reached a certain level, but hasn't breached over and started going lower. Support is the exact opposite, same thing basically on the other side. We must find a swing low when the price of the asset has dropped to a certain level, but hasn't breached and started moving high. Right, this is what it will look like as well. Let's take a look at this together here. We're looking at 15-second candles, right? So this is a binary example. We see the market on 15 seconds, doing a little bit of a dance here on the bottom part, then it breaks in, up, touches up there. At this moment here, we can consider this as a possible resistance. Not guaranteed yet, but possible. Then it touches down here. At this moment, it is a possible resistance support. Not confirmed yet. Oh, gone a bit far. So up this point here now, this would confirm our resistance. We have one touch to possibly, now it's confirmed. Market does touch it, it resists, goes down, another touch, breaks over a little bit, pulls back under again, stays in our channel. There's a touch. Now this confirms this moment. Now this is guaranteed. We can draw these lines in. Touches again, breaks out. This is a fake out. It doesn't stay out for too long. Remember, this is 15 seconds. So it stays out for 15 seconds. Next 15 seconds, it's back in again. Up, touches, down to the line, up, down, few moments there, back up again. So these are 15-second each one, guys. So imagine if you did do a 1 minute trade. At this moment, you see it touches here the line. You place the trade in there, market climbs up, 15 seconds, 30 seconds, 45 seconds, and then 1 minute, it ends more or less up here is where the trade ends, at the peak, and then crosses over up there to this little doji and keeps on going. So if it's a 1 minute trade, a 2 minute trade, all of these trades would have been good ones here if you're doing short-term binaries. And the inevitable at the end, it breaks out on the bottom. The question I might want to miss here from Mr. Khaled, Mr. Mohammed Khaled. The chart is 15 seconds. Yes, this is 15 seconds when we're looking at here. I'll show on one of the last slides on the presentation a whole board of how to set these up. So you're going to enjoy that slide very much coming up. This is a 3-piece example. Again, this is 15 minutes now, but we're going to do the same thing. Track the market to show how the market moved and how can we react to it. So here we go. Markets drop to this low point down here, but then it climbs up and gets into a bit of an uptrend, peaks at this moment. So this is where I would start considering this, and I'll draw a line in here with the consideration of this might be a good resistance. What happens later? It comes and touches down here, giving me a second. So there's the upward movement up there. The buyers have respected the resistance line, and the euro is reversing. Euro versus the dollar is reversing, going down. Okay. And then at this moment down here, as I mentioned, now the sellers are respecting this line, and the power is diminishing and shifting in the opposite direction. Hence, we see the climb up again. And what happens from here onwards? Guys, let's see how many touches we can see on this lines here before it moves to the next chart. There's one up here. There's another one. Third one, all the way down here. So the power is at this current time pushing upwards. Maybe it's hinting that the market is going to break upwards. There's a touch on the bottom on the support. Another touch on the resistance up. So that's 1, 2, 3, 4, 5 touches on the upper line, just 2 on the bottom. And what happens here, guys? There's the breakout. There's the breakout. We mentioned that this trend will not last forever. Sooner or later, it will all break up, all break down. In this case, it did break up. There's the breakout moment. 1 candle, 2 candles, 3 candles, and it just keeps on climbing up. So at this point, you know that you're looking now for a new resistance. This one, which was our resistance, will now become our support. I'm drawing a white line. This white line will signal to you guys where we're continuing on the next slide here. There's my white line. So you can see that this matches up. There's 4 green candles in a row. 5 is on the line there. So there it is, 1, 2, 3, 4, and on the line. What happens here? Market stays in a little zone. I could have maybe drawn a resistance at this level, but I didn't yet because there was not much confirmation of it. Market came down, touched what was before our resistance. Now it is our RSI. Oh, someone wrote something very good there. Mr. Japulo wrote, how do I avoid false breakouts? Very good question. Very, very good question. Well, the concept is that a trend might hold in the corridor for around 4, maybe 5 touches is what experts mainly think. Anything beyond 3, 4, 5 is when you start getting a bit cautious about that. First 2, 3 touches, if that confirms your resistance and support, then on the next touch should be a great opportunity just to get your trade in. If there's a 3rd or a 4th touch, then you can start getting a bit concerned, wait for a bit extra confirmation, don't be too hasty to jump in with the trade. Let's go back a little bit just to show that here. So, right guys, here's the first touch, there's the second touch, there's the 3rd one up here. At this moment, I could consider this as a strong signal so that the next time it touches or down or up, I would be able to go for a trade. This would be the moment, for example, place my trade in, there it goes, drops down to this point here. That will be in a very nice trade, 50 minutes each candle, so a nice drop. I could have had my stop loss, my take profit in on the support line down here. It comes very, very close here. It doesn't exactly trigger it, but if you're sitting in front of your screen, you could have closed it because it got very, very close and take a nice profit there. If it's binary or digital, you just imagine this as a shorter candle, and you would basically win this trade if it was placed in at that moment. All this drop all the way down to here, all these candles are underneath your entry point, so all of these would have been successful trades at any closing price under there. Up here it touches again, but generally it stays in the corridor, meaning a binary trade would have been successful there as well. All right, let's move on, not to lose too much time because we've got lots of stuff to show on the live as well. Mr. Ahmad is asking how to use Fibonacci levels and support resistance. We have a webinar, Ahmad, on that. That's coming up very, very soon. In March, I believe, we're going to have a webinar about Fibonacci. And anybody who likes the idea of Fibonacci, we're going to have a beautiful webinar on that one. So do be on standby to get the emails. We're welcoming you to that one. Right, so where were we? This is where you joined. You touch on the bottom here, just moving forward. Market moved up, and we have an all-time new high. That was the touch up here, making this my new resistance. Now, bear in mind the size of the candles we were having before, right? This was the channel we had before, the 2 red candles. Now this is a support line. This is a support as well. That up there is my resistance. So subtitles. Oh, I'm speaking too fast, Ethan. Sorry for that. Subtitles will be optional, hope. So now we have a narrow little corridor. Look how small these candles are compared to how big they were before. So this is why this corridor is so more smaller now. We have a touch on the top. There we go. This is my temporary resistance, or I'm considering this as my resistance. Here we go. Now we have a new support. So we have this support here and the previous ones down there, which are still in play, but not at this moment. Moving along, another touch on the top, second touch on the bottom, third touch at this moment, another touch, a fake out. This all here is a fake out. It did get out temporarily, but it stayed very close to the line, moving it back in again. And then we have the breakout. At this point, it breaks upwards. There's the line, and this is the third and final continuation of this example. So we're joining from this moment here. It did moments after, so yeah, previous resistance lines are now our support lines. So all 3 of these are supports. That is the all-time high resistance, and these are lines of importance for us because now we can see how big the candles get again. At some moments, there's massive candles comparing to the little ones we had in the channel. And the same thing though, now all the lines we placed in are in play. This was the all-time high up here. Now it's touched a previous support, or this was the initial resistance. There's the one on the bottom. So look at that. There's the first touch on the top. Now it shows respect to this line here, respect to this line there, respect all the way on the bottom. Now all the way on the top again. Look at these massive candles seen here compared to the little ones there. And then again, huge candle bringing into play all the lines you draw in. So never delete a line. Even if the market moves away from your channel, keep the old lines there just so you can have a point of reference. Timeframes. This is the one, guys, I want you to take a screenshot of for everybody watching this live. This is more or less how you're going to set up your support resistances. And 1 minute or 2 minute trading, you're going to set up the lines on a 1 minute candle. You're going to go to 1 minute candle intervals, set your lines in. Once you're happy, you have set your lines, you know where the market breaking points are, then you're going to switch over to 15-second candles and begin placing your 1-2 minute trades. I'll give you an example of this on my live account in a few seconds. Then if you're doing 5-minute binary trades or short trades, again, you're setting them with 2-minute candles. So you go first to the platform, put 2-minute candles on, draw your lines, support resistances, and then when you're happy, you have 3, 4, 5, 6, 7, 10 lines in, and you're happy with the grid you made, you switch to the 30-second candles and begin placing your trades once you see a support resistance getting touched. 15-minute, there it is, 5-minute candles and 2-minute in for the trading. 1 hour trading or more, you do 30-minute candles where you're drawing your lines, and when you're ready to start executing trades, you switch over to 10-minute candles. Right, here we go, guys. Now I'm gonna take you to my live account, and you can see it. Yep, everyone can see this. Show us live market. There we go. Emilia, just for you and for everybody else. So we're looking at binary 1-minute candles, right? As I mentioned, I'm going to do the binary example here for short trades, because I think this is what the majority of people like doing, short-term binary trading. So 1-minute candles, USD Japanese yen. This is where the market is now. What I'm going to do, I'm going to go a little bit back to see the relevant prices and movements. So straight up, let's start from this lovely point on the top here, because I can see straight away there's a very nice top at this moment. So let's draw it in there, that, wherever that was from, and let's first make it the color correct. I like drawing them red when it's on the top because it triggers to me that the market is going to touch this and go down. That's where I would draw mine. Let me make it thicker so you guys can see it. Show previous slide again. Ooh, I will. I'll show the previous slide with the board just after I go away from the live. Actually, you know what? Let's just do that. 1 second, guys. There you go. For your screenshots. If you want to make a screenshot, guys, go ahead now. Mr. Kale, you can get that. Don't forget, you're going to get the recording of this. As long as you signed up with your email on IQ Option account, you will receive the recording of this webinar in about a week's time. And you can watch this webinar as many times as you like, and we can have lots and lots of more of them. All right, so let's go back to the slide. There we go. There's my top, the red color. Now, what did it do after this moment? Let's just track here. It touched a low point there, then climbed up there, so dropped again here. I'm going to copy it. This is an easy way to do it, so you don't have to just re-click every time a new one. And then we're going to color this one in green because I expect it to touch and jump back up again, as it did. It touched it down there, came up again, touched my support on the top, my resistance on the top, came down, broke under, now it came all the way down here. So I'm going to put in another support at this level because it supported this moment, tracked back up again. Now, I'm not going to put this as a resistance because it is very close. In fact, it came very, very close up here. Then it came back down. This moment here is interesting. So I see already a couple of touches here. So I could put that in just to have it, might be relevant. So let's just draw I'm going to put a blue one in because I'm not that sure about it yet. Actually, I'm going to do it yellow. So I'm not that confident in that one. We'll see later if it comes into play or not. Then above here again, some kind of turbulence going on there, but it is very close to my existing resistance. So I'm not going to draw another line. Comes down. There we go. That's going to be a nice support down there. Duplicating this one and down here. I hope you guys can see me because I'm seeing webcam not back. I hope you guys can see me. If there's any issues, the moderators will be there to help you with issues with cameras or audios. Okay, so it stays very close at this frame. Look how the support is working here, guys. Touching the support, touching the resistance now because this is a resistance, down to the support, up again, staying very close, breaks down, and now we have a new low. So again, I take that line, I'm going to copy it. No, I want it. And I want to copy it and put another one on the bottom. Comes up again, look at all the respect. There's nothing new for me to draw in. Everything's getting respected. Here we go for a drop again. There's a new drop all the way down there. So let's copy another one. Now we have 7 lines implemented. There's another one down there, and that's it. Market is now in this play right here. I have 7 lines. I'm happy with 7 lines. Can be any number. Wherever you see a relevant number, you can maybe draw even more. You could say that you like to see a resistance in here as well. Could easily do that. Copy this one in red color. You believe that is there a resistance as it came to here and then broke down, and you got 8 lines. Can be 6, 7, 8, 10. There's no limit as how many. The more you put in, the more better ones you put in as well, the more confident you'll feel about the trading as well. So I've done this part. I'm now happy with the lines I've drawn in. What do we do next, guys? What candles do I put it? If anyone remembers from the board I showed before, do I put 5 seconds, 10 seconds, 15 seconds, 30 seconds? I'm keeping an eye on the chat now to see who writes what first. I started with 1 minute candles. Okay. How do you copy? Copy was easy. Just click on the line and this one here, clone. You clone it. You don't like it, you remove it. Okay. I'm not seeing the answer, guys. We're doing 15. Once you're happy with the lines you drew in at 1 minute, now we're going to go, there we go. There's the one. Mr. Kanan writes it correctly, 15 seconds. There we go. So what's the market doing now? It's breached over this support here. And now I am in a thought. Where did the market go? It climbed up, stayed on that line for a bit, danced away, climbed up, stayed on this line a bit. Now there's 2 outcomes. Or the market is going to be treating this as a support and it's going to keep on climbing up. So I would go with a buy trade in this opportunity, or it might be a bit of a fake out right now. And that means it's not going to stay above this for long, and it can come down and break under again and respect this channel. This one, guys, it is totally up to each trader how you use it. There is no right and wrong. It'll right in both situations, but it's just useful to have this indicator here to understand what is going on. Now that there was quite encouraging. There was a big wick to it and it came back up, giving me a bit of insurance that this support could be honored and this could be our very nice support level. Right, so that's the concept, guys. That's how you draw your grid. You have a very nice grid with all these in play. So if you're trading now for the next 1 hour, 2 hours until you meet your target, hopefully you're using good money management. And if your target is to make $20, $30, $50 today, 1,000, 2,000, trade correctly, get your prices in correctly, amounts of trading. My demo account here has almost 20,000. So I could be doing trades with percentages, 2%, 3% per trade. That would be a decent amount. And I am more or less, if I do lose a trade, it's not going to devastate my account. If I keep them low, it's less risk, less stress, less emotions from my side. That's the biggest worry always, the emotional part. So it climbed up, danced away, and what did I say? There we go. It did break under again. It stayed up for about a minute or so, minute and a half, and broke under. So this gives us understanding of what's going on. Have in mind also, when we look at this, if I just hide now the lines I drew in, the support resistances, just from looking at this now on 15 second candles, would you say this is a sideways market, an uptrend, or a downtrend we're seeing on this currency pair, guys? Let's see who will give me the answer. Not the answer I'm looking for, but who can see this somewhere here? Yep, I did say you can use the RSI to see the levels as well. I'm not going to give an example of that because that will get us dragged in for all day. Uptrend. Ms. Barun, very correct. It is an uptrend. We can see here there's a clear starting point down here to where the market is now. That would definitely clear out. There's an uptrend here. So these support resistances work better if you are in a sideways market. But since we're not in a sideways market now, I can just put my grid in. I just took it away. There it's back again. This is how you guys can take it away and put it back in again, right? This little eyeball up here, take it away, put it back in, just to see differences in the market. Trade nicely, make your profits, and once you have, exit the market. Don't be greedy. That is very important. Downtrend. So yeah, it's a downtrend in the last couple of minutes here, maybe last couple of candles. But I was more like looking for the uptrend here, the majority movement from where it started all the way down at the bottom there to up here. So the majority movement is an uptrend. Right now, someone, Mr. Jai here writes, channel up. Now I'm going to show you something about that channel up. Let's see here. A beautiful example I found for you guys on Bitcoin. Looking at Bitcoin on 7-day candles. So this is something for long term, going all the way back to 2013 at the bottom here. Imagine buying Bitcoin at $600 in 2013 and still having it now when it's at 37,000 or selling at 67. That's a dream come true. But let's take a note here, right? From this chart, from this moment, what do you see? You see, of course, an uptrend, a downtrend, a massive uptrend here from 2019, 2020, down a bit, up again, down a bit. Now, how can support resistances or trend lines help me here? Let me show you a very nice little trick. I'm going to take a trend line. I'm going to find the highest moment of 2017 and draw it into where the market is right now. Let's bring it in closer so I can move it around a little bit, just to be in line with everything. That point matches up nicely. Where is it? And this point here, let's put it exactly this. We get a nice pattern. So this is more or less the motion the market has been in. Look at where it was in 2020, 2017 or 2018, more or less there, end of 17, and how at this point here we can see it does respect this line. Lots of wicks touching it, launching over, lots of wicks touching, bouncing up, and last week as well, touches it, bounces back up again. Now that's one side of it. What about the other side? Can I see anything else I can maybe do here? Let's take this, let's clone it, move it now up here. So we have now a parallel channel moving upwards. Now, understand that this market now is moving not horizontally, but it is in a trend. It's an upward trend in both channels, meaning that if I, for example, last week saw this as a moment that, okay, it touched the support, now I expect it to go up, I'm going to buy a trade at this moment, leave it open for a couple of months, maybe a couple of years. I bought a low price. I don't expect it to come down here again anytime soon, unless something like this happens as it did here. And then even if it does, I can imagine that this line will hold strong if it has held strong so much already. Then let's see what would happen if you keep it open until August. Let's say the market draw something here for you to see. Still see this, right? So let's imagine now that the market makes a movement in this direction. Goes up a little bit, comes down a little bit to there, moves up a little bit more, comes down a little bit. Markets never stay in tune. And then let's say maybe it makes a movement like that. And we know that August time this year, maybe the price touches our resistance on the top as it did here, right? And then if you bought the trade as I mentioned here at 37,000, 35,000, and you sell it way up here above the 60,000, 65,000, that is a very good trade. And you can close your trade there, take a profit. As you can imagine, maybe the market would start dropping. Maybe you see a downward movement happening, comes down to here by the end of the year. You see it's respecting the line, gives you a go signal to close that trade and open a new trade as you expect the market to go up again. So this is how, by just implementing a little channel, you can take full advantage by just drawing two lines, guys. Look how all that information I gained from putting two lines in. Take them away. What do I see? Absolutely nothing. I can maybe see it now because I drew them in, but without the lines, I had no idea what I'm even looking at. Right? That's a second way. Okay, so let's move back to the presentation. Someone wanted again, I'm going to show this one more time so everyone can see the chart again and show the times. 30 minutes have passed already, so we don't have much time for the Q&A part, which is coming up very, very soon. Hope you guys have questions. I'll be answering them very shortly. So take your screenshots, guys. There was a message in the chat throughout this webinar explaining the next webinar, which will be on the 7th of March. Give me the option just to click on that and sign up directly to it. I hope you guys have. Use the email on your IQ accounts. You can receive the recording of this and how to trade on Forex. Well, for Forex, if you're doing long trades, this was a lovely question here from Ukagbu. So Forex, you're looking at the last one down here. If you're doing 1 hour Forex trades, you're going to draw the lines in on 30-second candles, 30-minute candles, sorry, 30-minute candles, and then you're going to execute on 10 minutes. Once you're happy with the lines you drew in, then you're going to go to the 10-minute candles and begin placing your trades in. Was implement at school. Geometry, I love that one, Mr. Dever. Geometry, subject that many people did not like, I'm sure, but it is useful for trading. Right, so Q&A is up now. I'm gonna stop the sharing of the screen so you can see my face. 1 second just to get this one. There we go. Now you can see my face here, and I will be looking at the questions from the chat. Expiry times. Ms. Manka wants to please explain the expiry time. So if you're doing trading on binary or digital trading, every trade has an expiration, right? So you know basically how long time frame you have to trade. If you're doing long trades, if you're doing binary, for example, that's what we said on the chart before when we're looking at the chart, you're doing candles on short intervals, 1 minute, 2 minute trading, you're drawing them in on 1 minute, and then you're executing on the 15 seconds. So each candle, each trade you're placing in, if you're doing a 2 minute trade, you should be seeing around 8 candles after your trade has been placed in. This way, you have a very, very good opening for when to open your trade for a binary trader. If you're a Forex trader and you open your trade on a resistance, so you have a lovely upper moment, and you see that as a nice opportunity to enter, you open your trade there. If you're worried that you may have made a mistake, you can put a stop loss just above that. So imagine where the resistance line was, you're going to put your stop loss just a little bit higher. That will be in case of a mistake. But hopefully it won't be a mistake. Hopefully the market will drop in your favor. You'll see there's support line on the bottom, and that can be your take profit. So you leave that trade open until hopefully it goes all the way down, touches your support, and it cashes out automatically and takes your profits. Let me see more questions here in the chat. There are some questions I'm hoping that my moderators have collected as well. Ooh, lots of questions here. Questions from before the webinar. Is there any indicator I can use for support and resistance? Well, Fibonacci. This was from Luke. This question that came in. Mr. Kenna Luke, what indicator can you use? I would say Fibonacci. It is very similar to what we're doing here. We're drawing the Fibonacci lines in. In brief, as I said, we are going to have a beautiful webinar coming up that we worked on for this, and you'll be able to hopefully understand everything about Fibonacci's on that webinar. So you basically draw from up to down if it's a downtrend, and from down to up the Fibonacci if it's an uptrend. You find the opening point where the uptrend begins, so that's your starting moment, and then you draw up to the high moment, and then you see the retracements between, and the support resistance will line up automatically. Sounds complex. Trust me, next month when we do have this webinar for you, you'll love it. Luke, this was for you. Definitely sign up for that webinar, and you'll not be disappointed. Okay, so executing are always better on smaller time frames. This was from Jabulo. Yes, that is correct. It's giving you on the bigger candles where you're setting the lines in, it gives you a better picture of what is going on. So you understand that it's a bit less noise on the bigger candles. So once you have the lines in, you switch over to something a bit more adequate for the trading you're doing, long-term, short-term, according to your trading. And then you can just do some fine tuning and fine adjusting at that moment where you do have that opportunity. Once you are ready to place the trades in, move the lines a little bit up, a little bit down, and you'll find the perfect support resistances. Jabulo has another question. So the more touches, the better my resistance and support. Yes and no to this question, Jabulo. We expect it to touch, if it is a strong support or a strong resistance, we would expect it to touch 4, maybe 5 times on the resistance or on the support. And then inevitably the market will break out upwards or downwards. It's not going to stay in that channel forever. So if it does touch 1, 2, 3 times, there's a very good chance that the next touch will be a good opportunity. If you catch it a bit earlier and you see it touch twice, that's a much better time. I would say the third touch on the top or the third touch on the bottom is the Goldilocks moment. That's the perfect moment. Fourth, fifth touch, it's a bit nervy. The market might just break out. The resistance might have faded and the market breaks out into an upward or a downward on the support side. Okay, so Mr. Singh asking, hi, is the best time OTC trading Forex in a day and why? A lovely question, but this one is a bit of a vague answer, unfortunately, because trading in general always is up to each person's preference. Some people like high volatility, some people like low volatility. So for whether it's OTC, whether it's live market, it always depends on what people like. If you do like high volatility, aim for moments when you do see big candles. We do have indicators on the platform that do show volatility, and you can always just click on that to use your volatility indicator to show you that the Bollinger Bands, for example, very good indicator for volatility. If you see the Bollinger Bands are widening, that means that they would expect more volatility. If you don't like volatility, avoid that asset. If you do like volatility, then that's a good asset to trade when you see the Bollingers widening and giving you a good moment to see that. Okay, more questions coming in. And we are in for 40 minutes already on the timer here, more or less. Why does the price respect the RSI line, and what is the reason? All right, well, a simple way to explain it, this one is for Benson. Markets basically are things that are changing constantly. Somebody has bought, for example, the euro against the dollar. I changed my money into euro an hour ago, and I've made a good profit. Euro has gained value, came to a high point, and I see there's on a chart there, I can see, for example, that this price is being resisted now. I might think, oh, okay, I bought this an hour ago. I made a nice profit. I'm going to close this trade because there's a chance that others who bought this euro about an hour or two ago, they might jump ahead of me and start selling their euros. So I want to sell it too. So I'm going to put a sell in also. So more and more people start selling, cashing out their profits, and this means the power now shifts. People that were happily buying until this moment, now there's more people trying to sell than people trying to buy. So if I saw the price peaked at 115, now it's 114.9, 114.8. I'm thinking, no, I need to sell it. I need to get my money now. I want to make my profit as much as possible. So I'll put my sell in as well. And I sold. And I encourage more people to do the same. And you see slowly it starts drifting down and away from that high point, the point that we notified as our resistance. Same on the bottom side. Market comes down. People who are selling. Then somebody says, you know what? I'm not willing to sell anymore. The people who had cashed out their profit are cashed out already. Now people see that as a good opportunity to buy the euro. They consider it very cheap. So they're going to buy it and they're going to do what the other guys did before. Hold on to it. Wait for the majority of people now to start wanting to buy. That will lift the price over the support, off the support, and it will start pumping it up in an upward direction and higher and higher and higher. Right, so that's answering questions that my moderators have collected. And guys, we're gonna have to call the webinar now. So this is it for the recording of the webinar. You can watch this as many times as you like. So please enjoy, watch out with this webinar again to help yourselves improve your trading and get the best results you like. It's been my pleasure. My name is Angelo, and I look forward to see you all on the next webinar.